Good afternoon, Facebook audiences. This is Jennifer Noreen with Beyond Brand Collective, and I'm here with two of my friends and colleagues, Bryan Lichau, who is a CPA. Hello, Bryan.
Hello.
And Marie Pettie, who works as a property manager and real estate broker in the Tacoma area. So we are talking today about the benefits, the tax benefits of real estate investing, which seems like a very timely topic for what's going on in the Pacific Northwest right now. We have quite a market that is only remaining very hot, so very busy. And so I wanted to ask Marie first, what trends are you seeing with your realtor hat on? What trends are you seeing in the real estate market right now?
Well, of course, the market continues to be very hot right now. You put a property on the market or list a property and it's gone within a week. We're seeing multiple offers, over appraisal, potential buyers, waiving inspections and doing things that haven't been done in the past. If the property if an offer is made over listing price, they're bringing money to the table. There is fierce out there as far as getting properties market today. And so, and then also what's trending are a lot of my, client owners are selling their properties right now because they see that it's a good market to do that, to regain appreciation, because a lot of the properties have depreciated and they want to regain that appreciation advantage. They're taking that equity and purchasing across the country in Arizona and Hawaii, and things are just moving, to and fro and moving really fast in the market right now.
Yes, and so people that are selling homes are selling them quickly with multiple offers and very aggressive buyers, I'm sure. The whole process is a little bit different, isn't it?
Yes. Mm-hmm.
Yeah. So, Bryan, as a CPA, are you seeing an uptick? Are you working more in real estate investments, or are you just working with your existing clients to help them see the advantages, or what's kind of going on in your world as a certified public accountant?
Yeah, a little bit of both, really. I mean, exactly what you said. It's just with existing clients, they're making additional purchases. They're making adjustments to their portfolios, things like that, to take advantage of a lot of the appreciation. Like Marie said, it's a strange market, but it seems like also we're getting a lot of new clients that their situations have really become more complicated because they've done more real estate investing especially last year. I can't tell you, it feels like every other client I get right now, a new client has something to do with real estate investing. So absolutely, we're seeing a big uptick in those changes, and I mean, I expect how those changes are going to be treated down the road here too. We'll see if the legislation is going to make any adjustments or anything like that with how they're treating everything. And the state of Washington's talking about doing things like a state capital gains tax, things like that. So there's definitely complications and more changes in the works. So yeah.
Wow. So you are seeing an uptick in that kind of work then, probably amongst
Absolutely.
your current clients and probably taking in new business. Wow.
Yeah.
So you mentioned capital gains, and I know that's a topic. You both mentioned in our pre-conversation the 1031 capital gains advantage, or what I think of as an excuse to not pay taxes or a trade-off. Can one of you talk a little bit more about 1031 and what? I'm just new, learning here, trying to understand. So that's my impression of what it is. But what is a 1031?
Yeah, absolutely. It's really what I would call as a deferral. You're kind of kicking the can down the road by exchanging the same type of property for another property of the same type. So if you've got a rental property that you've been renting, residential rental, you can essentially sell that and exchange it if you follow all the processes into a new property. And so as long as that's another residential rental, or potentially even into two different properties. So there's lots of flexibility that you you can take with it. So
So,
yeah, so it's deferring those capital gains is what that is.
so if I buy a single family home that I'm going to use as a rental unit, or I sell one and then I buy a new one, the capital gains tax that I would typically owe is not owed. Is that correct?
Potentially, yeah, potentially, as
Okay.
long as you follow those same the right processes and go through all the hoops that you need to do. So yeah, I'm sure Marie knows knows
Yeah.
about
And
those
so,
hoops.
Marie, from your perspective, what's the 1031?
Well, as Bryan mentioned, it is a deferral. The taxes are deferred, and it's actually a very smart thing to do if the property has depreciated, because who wants to pull out $50,000, $60,000 to pay the government when you can actually leverage up to a bigger property and more of an income stream? And that's one of the things that you have to do is the debt that you have to move up. The debt has to go up, and then you have a bigger property and more income. So it's actually a very smart thing to do.
Okay. So are you seeing an uptick in those, in people exercising those?
Yes, I have, I haven't seen very much interest in 1031, but here lately, a lot of people are saying, I want to do a 1031 exchange because they want to get a bigger property, want more of an income stream. So I have actually a client right now that is looking at selling 2 properties and then buying a bigger property, as a business property.
Wow. So so how is that different than a year ago? Is that like
A year ago?
I mean, before COVID and
Mhm.
when there was less activity? I mean, our market was hot, but were you seeing lots of that a year ago as well, or is that something that COVID has brought on because of the rapidity of the loan or the selling process or the opportunity in the market? Or
I don't know if it's directly COVID related. I just know that people are looking at their options and they're seeing that is one option. 1031 exchange is one option that they can actually take advantage of. The difference between last year and this year, as far as the market, yes, you're right. It was very hot then. You put a property on the market and it was gone within a week, but there weren't any, if you got a low appraisal, people bringing in $50,000 in cash and still paying for it. That was new. That's new as far as I'm concerned. Or people that are cashing in their bonds and what have you, and bringing cash to the table to purchase, 500,000, 600,000, 800,000 to the table to buy, a property so that they can have the advantage.
wow, that's a lot of change. That's a lot of change to show up with to make a purchase. Goodness.
Mhm. Yeah.
So it's more of a cash market.
Cash is not always king. Not always. I mean, it's really tricky, and depending on each transaction is different. And even cash is not, the offer is not accepted, even if you have all cash. It's something else that because there's different contingencies that people are waiving. Like they're, waiving the appraisal, they're waiving the inspection. If you have somebody, of course, all cash, you're not going to have you're not going to have to worry about the contingency of finance contingency, but there's other contingencies that that come with the transaction.
Well, some of that is Greek to me. So you're seeing more of particular things going on in transactions, and everything is happening lightning fast and very aggressively in many ways.
That's true.
And it's affecting outside of Washington State because people are taking their equity and spending outside and all of that. So are either one of you involved in outside of Washington State transactions?
No.
Yeah. I mean, I've got clients who are performing those transactions or buying homes in other states, and using them as vacation rentals, things like that. But which doesn't change a lot from my perspective. I mean, there are from from a tax standpoint, yeah, I mean, we might have to do some certain things in different states, but for the most part, it doesn't really change a lot of what we do. So one of the things that Marie mentioned as well is because of the change in the market and how quickly things are going. I think that even it makes a 1031 exchange more desirable, but it also makes it more difficult because the certain identification requirements. You have to identify the property within 45 days. You have to close on it within a certain time frame as well. And if you don't reach those, if you don't meet those requirements, and you don't, sure, you can put an offer in, but if you don't get it, I mean, it's all of a sudden that the exchange is denied or is disqualified. So yeah.
Okay, so it's not guaranteed if you don't do it within the stipulations.
Yeah, exactly.
Yep.
So it could get a little tricky, but yeah.
Yep. So I know we wanted to reserve some time to talk about the moratorium, which I know obviously has a huge impact on investors and renters alike. And there's been a huge inflow of assistance available to Washington State residents. So that is a benefit to both residents and the owners. So Marie, can you talk a little bit about that and how that's kind of affecting the environment?
Yeah, Pierce County rental house or assistance program came in with, for the county, Pierce County, about 59 million for Pierce County. And the difference between this round of assistance from last time is that they've streamlined it into one website, and there's about 8 providers working together on that one website. So it makes it easy we're able to, as landlords, to apply for each resident, which in our office, we've applied for every single resident that is in need of that assistance. And now what they have to do, those residents have to go on the other side and click that Safe Harbor is their landlord and fill out their current income information and all of their current information. And then that is processed through an approval process through Pierce County. Once they're approved, then the county cuts a check to the landlord.
And so the money is available, but the money is not automatically distributed to the property owner. The money is applied. It sounds like, from what you've explained, that the property owners are registering and the residents have to raise their hand and say, yes, I want this assistance, and here's my income level, and here's my hardship. And that information is, correlated with one another, and then the assistance is provided. So it's not just a straight stream of funds to the property owners. Yeah.
Particular round stretches from March 2020 all the way through to December 2021. So residents are able to go back and catch up and then bring forward and be able essentially to clear up their past due balances.
And so from a cash flow standpoint for Bryan, when you're working with the owner, you were saying earlier that it's just a matter of when the money comes in. It's not necessarily, it's when the cash actually hits their bank that income will be accounted for in their taxes, right?
Exactly. So yeah, so some planning might need to be done for 2021 if they're expecting to get, all of a sudden they've got 6 months worth of rent coming in from last year. That's six months of additional income that they'll have for this year. So that's definitely some planning potential or need for potential planning there to happen. So yeah, absolutely. It's an interesting time we're living in.
It is. So a lack maybe in 2020, but a increase in 2021, kind of
right,
reconciling all of that. So, all right. Well, anything else you guys want to talk about from a CPA or property management or realtor perspective? What's going on? That's a lot of parts of the money market or the real estate market in our area. So, what else do you have to share? Do you foresee this trend continuing, Marie? What are your thoughts now? I know we talked about that a few months back, but what are your thoughts now as far as where this is going? Is this going to change suddenly, or you don't think so, or what do you think?
Market, it's we don't read crystal balls or anything, but it seems to be strong right now. and people are still, what really, you know, amazes me is that it's strong. People are still out buying and selling, and you know, calls all the time. You know, I'm ready to go look at properties. I'm like, okay, let's go. And you know, it's just it's strong right now. But I did want to mention, and one more thing about the moratorium, that it has been extended through June, in case anyone didn't know or was wondering, because they did have an end of March date, but now both the state and the federal CDC has an extension to June 30, 2021.
So CDC moratorium and the state moratorium on the actions that landlords can take if they don't collect rent on time, right?
Right.
So what are those dates? So say them again, because you're very familiar with these. So the CDC has been extended till when again?
June 30th, 2021.
And the Washington State?
June 30th, 20.
Okay, both June 30th. Got it. Okay. So that affects my world if I'm a property owner for sure. Yeah.
Mhm.
Yeah. So anything else you want to say before we wrap up, either of you?
One thing, just outside of the property management or the rental property world, easy for me to say, is people are selling their primary residences now too, and so we're actually even seeing some cases of people achieving gains greater than the exemptions that they get because with a married couple, there's generally a $500,000 capital gains exemption when you sell your primary home if you've lived there for more than 2 years. But we're even seeing some people selling their properties and being over that 500,000 in gains, which is it's pretty rare. But I think that's an area that can catch some people off guard when they're looking to sell and finding out that, oh, I have to report that as a gain. So it's there's definitely some advantages to getting some assistance, some professional assistance with that to make sure that we can minimize those gains and only pay as much tax as you can or as you need to. So yeah.
So you're not missing out on anything.
Exactly.
Yeah,
Exactly.
makes sense. All right. Well, thank you very much. I'm here again with Bryan Lichau, who's a certified public accountant that practices out of Federal Way, but services pretty much South King through Pierce County. He lives in Gig Harbor. And Marie Pettie, who's a property manager and realtor in the Lakewood area, but services Thurston, South King, and Pierce County. It's nice to see both of you today, and thank you for the things you've shared about the tax advantages of real estate investing. It's been good to see you. Thanks.
Thank you, Jennifer.
You're welcome.
Thank you. Yes, it was a pleasure.